YouTube. Welcome back to the Investing on a 9 to 5 YouTube channel. It's your boy, the Dividend Dog. Hope you guys had a good Monday and a good weekend out there. On tonight's video, we'll be talking about two gasoline monsters that I'll be taking a swing at in the portfolio. But before we dive into that, I want to give all you guys a shout out there for hitting the like and subscribe button on the channel. Thank you guys again for getting us over 130 subscribers. We are on our way to 200 subscribers. Once again, wanted to give you guys a shout out there. And if you're new to the channel, welcome. Don't forget to hit the like and subscribe button as well so you don't miss out on any future updated content. So let's dive into our first guest. Will be BP, British Petroleum. So BP is saying right now the demand for oil and gas will drop dramatically by 2050. So they're saying the share of fossil fuels will, which is a primary energy source will fall 80% from 2019 to between 50 and 20% by 2050, according to like their outlooks. And then they're saying like renewables will grow 10% to between 35% and 65%. So renewables, they're saying that renewables will take over for the main primary energy source here, which is cool to see. So past year, BP price wise up 7%. I think they may be a little bit down now, but it was when I recorded this, they're at 35.17. Past 5 years, they're down 13.76%. Chart sort of looks like ET. So market cap, they're at a $105 billion market cap. Highest on the daily, 36.90. Highest all time, 79.87. And you guys can see 1 year total return, 14.20. Forward PE ratio, 5.3. Got PS ratio at 0.5. Price to book, 1.82. EV to EBITDA. Enterprise value to EBITDA is 7.01. Dividend is at 3.91%, which is awesome to see. Revenue growing year over year, 52%. EPS is growing as well. Earnings per share growing over at 128%. So it seems like they're doing good things over here at Shell. I'm not Shell, but at BP. Obviously, they are a gas company, so continuous lots and lots of revenue. So back to the earnings per share. Once again, they beat it last estimate. They got revenue at $57.8 billion, their last earnings report, which is awesome. They also beat it by 65 cents. They got it at $2.59. So good things to see here for BP. If you guys don't know who BP is, obviously you guys go to all the time for gasoline, or if you go to Sunoco, Shell, or whoever. But breaking them down, upstream, they do liquids gas. Downstream, they have brands like Castrol Oil, BP PTA Air, RO, Arco, and obviously BP itself. With the Ukraine war with Russia, the Russians and their missiles are destroying like different types of energy platforms outside of Ukraine, as you guys can see here in the pic. So once again, the share of fossil fuels as a primary energy source will fall from 80% from, between 2019 to about 50% and 20% by 2050. Global demand for oil is expected to plateau for the coming decade before starting to fall off, BP said. The biggest factor will be transportation, which is growing more efficient and increasingly powered by EVs, electric, rather than oil, even as an overall demand grows in emerging economies. So with BP and obviously us changing up to renewables energies, they're taking an opportunity to take a lot of cash and invest it into other sectors, such as the solar tech. So BP has invested millions into this solar tech company called 5B. They're based out of Europe, Asia, South America, obviously in the United States. They've deployed already 60 megawatts of solar tech worldwide. So it says here this investment will allow 5B to experiment further globally and invest in research and development, which will help their company grow. So meaning they will use the funds from BP here to help their company grow in the solar tech sector. And this is who they are. And this obviously they have these solar fields here, and BP is helping these guys get the business rolling, which is cool to see. BP is also linking up with Hertz. They're charging the Hertz vehicles at the Hertz lots. So when you guys are out at the airports or if you're at a Hertz lot, more likely in the future we'll see BP's charging facilities at the for Hertz. They have linked up here, which is cool to see that they're going into the EVs, going to solar tech too. And obviously Hertz is accelerating their adoption of EVs as well by investing in the largest rental fleet of EVs in North America and expanding the availability of charging stations, which BP is going to help with them do that. BP Pulse is what it's called, expanding its global network of high-speed charging for cars, light commercial vehicles, and trucks with a global target of more than 100,000 chargers by 2030, with about 90% of those rapids or ultra fast chargers. It's at a 65 here from Div Tracker. Once again, we got that market cap at 105 bill, dividend yield 4.10. Got that payout ratio, guys, 19.35. So they have lots of cash to cover the dividend, reinvest back into the company, pay down debt, and etc. Now we're going to highlight here this dividend growth. It's obviously it says negative 10.75 here in a dividend streak of 30 years, right? So we're going to dive in here and take a look at why is that. So they cut their dividend in 2020 to pay down some debt, and obviously the oil industry was obviously with COVID, the outlook was not very, very strong. So management has also said they are dependent on getting that dividend back to where it was before COVID. Once again, that's something that ET said at the beginning when they said they were going to get their dividend back to pre-COVID levels as well. And as you guys can see, from 2021, they're starting to make that increase there. And obviously, free cash flow has started to increase back along with it as well. So BP had their dividend back in 2020, once again, for the first time in a decade after a record 6.7 billion second quarter loss when the coronavirus, hit the fuel industry. So it obviously hurt a lot of investors. But obviously, with that being said, BP said it's aiming to reset a resilient dividend of $5.25 per share per quarter and return at least 60% of future surplus cash flow as share buybacks for investors, which is awesome to see. So this means that they're going through a transition phase, and they are obviously they had to cut the dividend, but it looks like they're continuing to build that dividend back, guys. Once again, this is not financial advice, but I like this. I like what they're doing. I like what I see. They're moving forward. They're investing in renewable energies, EVs, and so on. Once again, they are killing their earnings reports. As you guys can see, they're just smashing earnings. Their earnings report all the way back from March, or not March, but April of 2021. Profitable. The past, obviously, was just 7 quarters here, 8 quarters have been very, very profitable. And this is just a snapshot of their last earnings report here. Once again, they're going to continue to get that dividend 4% through 2025. They're going to tend to allocate 40% of their cash flow to further strengthen the balance sheet. They're going to lower carbon energy, convenience, and mobility. Once again, they're going to continue to allocate more money from the cash flow to buybacks, and which will help investors down the line. So this solid here, BP. I did pick up a few shares last week right here before their earnings report. So I'm expecting them to do some big things. We have Shell, ticker symbol SHEL. We got Shell here at 58.30. Last closeout here on Friday. And they got a 5-year total return with dividends included at 9.64. Market cap $203 billion company, so a little bit more than BP. Dividend yield 3.95. So we got a PE ratio at 5.1, forward PE ratio 6.25, EV to EBITDA 2.7, and then you got the 52-week high at 61.68. You got 1 year return at 11.11%, and then you got year-to-date returns right now at 2.37%. Then revenue year over growth for 5 years 4.56%. Then EPS, earnings per share, 5-year growth is at 29.63. Shell, once again, gas powerhouse. So this is how Shell breaks down their income here. So you got gas stations, you got the wind farms where they store it. You got the farms out in the ocean. You got the research where they do research for all different types of gases and liquids and things of that nature. So 2022 brought 25 billion quarterly there. This is what they look like for themselves, spread out for their startups, and basically where Shell does a lot of their research and a lot of where their oil is being produced at and so on. So as you can see, they're worldwide, not just at the gas stations. Last earnings report, Europe's largest energy company reported a 2022 earnings of 39 billion, which is a 109% increase from the prior year. Check on my book here. If I'm looking at this here, full revenue was at 381 billion, which was up 261 billion prior year. And then their earnings adjusted increased 4% to 9.8 billion, topping analysts. So they beat analysts from what they thought they were going to do, or as far as like a revenue and earnings perspective. So, and revenue rose to 101 billion from 85 billion. So this is awesome. And obviously all this growth came from oil and gas prices, sliding up and down, the third quarter, which is good to see. For linking up right now with NEO, which is a EV company, EV powerhouse company out of China. But NEO and Shell are planning to jointly install 100 of their swap stations in China by 2025 and operate pilot stations in Europe starting in 2022. Shell's charging network in Europe will also be available to NEO users. So this is one of their swap stations here. So obviously you guys can see this is what obviously the Shell gas station looks like. And NEO now has a partnership with them to have their swap stations for their EVs to be there. And this is what, it will look like here. So obviously customers will be able to pull their car in. You'll have the NEO BAAS, which is battery as a service. You will pull your vehicle in. While you're in the vehicle, this machine here, device will lift up the car, take out your battery. You'll be in and out, I would say, less than 10 minutes at this swap station here with a brand new battery. Boom. Shell cuts the dividend for the first time since World War II. I had to take a look at this one, right? So this is analysis by Simon Jack. So said the collapse in the oil price has given Shell the perfect opportunity to do something it's been wanting to do for years, which was cutting the dividend. So for the first time in 80 years, which will give the company some much needed wiggle room. So it gives them a little wiggle room. They're not cutting the dividend because like, hey, we ran it bad. We need a little bit wiggle room here so we can continue to be successful down the line, right? So boom, company debt ballooned up to from 1 billion to 73 billion during the time. During that same period, they paid out 153 billion in dividends and spent 48 billion. So yeah, they were way over their head. Also, it was trying to process to turn itself away from being thought of as an oil and gas into an environmentally conscious energy company, aka heading towards renewables. It may be painful for those with pension funds, but this moment gives the company to cover its needs and change the direction, which is good for long-term investors that are now looking at to take an evaluation at some of these gas companies out here. BP may be kicking itself it didn't do the same earlier this week. So once again, back shots fired at BP here. So fast forward now, Shell hikes the dividend 15% as profit doubles to record 40 billion for 2022. It's the first earnings report presented by Swan, which is the new chief executive officer, was CEO at the start of the year, who was replacing Ben Van Beurden, who was the guy who had the dividend in the company when they cut it, right? Who stepped down after 9 years. So this guy's already stepped in, reorganized the company's core business. He's already been in the business for 25 years, so he knows a lot about the business, which is good to see, which he knows a lot about renewable energies and obviously the business itself. So this is good that he came in and they're already hitting rocket profits at 40 billion, and they hiked the dividend 15%. So that's good to see there. Again, 5-year revenue is growing. Obviously, it went down here in 2021, or starting to head down in 2020, got down in 2021. Now they're starting to make some profit here moving forward. And though they're payout quarterly, annual dividend income is $1.15. They have that 24% payout ratio, 3.9 dividend yield. So these are check marks here in my book. Obviously, the dividend growth is negative because they had to cut it, but we also know why they had to cut it, and they are now getting it back to pre-COVID levels. And they're aiming to do that with renewable energies and acquisitions and so on. And guys, that is all that the dog had for you guys tonight on the Investing on a 9 to 5 YouTube channel. I enjoyed handing this over to you guys, letting you guys know about Shell and BP. Once again, these two stocks here are undervalued in my book. Let me know what you guys think in the comments if you guys are looking at any oil or any energy stocks. And once again, it is the Dividend Dog here on Investing on a 9 to 5 YouTube channel. Don't forget to hit the like and subscribe button. I will see you guys in the next video.